Hello everybody, welcome back to my channel where we talk all things finance and investing. In today's video, I'm going to address the question, what would I do if I was starting my investment journey today in 2025? I get this question a lot, particularly from my younger colleagues, friends, people who are really just getting going in their careers. So I thought I would do a video on it, so let's get right into it. All right, so if I was in my 20s and just starting out my investment career, the first thing I would do is build a nice solid financial base and clear the decks for my investment journey. So I did a video on this last week, link in the description for that, as well as some other videos related to this topic today. But basically the first thing I would do is just make sure I've cleared off all of my high interest credit card debt, clear all of that out so you're starting from zero, and then build up a 3 to 6 month emergency fund so I'm on a nice solid footing in the off chance I lost my job or had some sort of an emergency where I needed the money. So I would get my house in order with my personal finances, great understanding of my expenses, income, and everything like that, and then I would begin my investment journey immediately after that. All right, the next thing I would do after I got my house in order financially is sit down and figure out my goals in terms of what it is I'm investing for. In all honesty, I think this is the most important step and the one that people just do not do and they do not think about. When you're in your 20s, for example, it can be very hard to think about 20, 30 years ahead of time and what it is you're really saving for. A lot of people at this stage, and I was one of them, you just want to get rich quick like everybody else, hoping you can find the next small cap stock or cryptocurrency, whatever it is, to just help you get rich quick. But the reality is it just doesn't work like that. So you've got to sit down and think about the goal. It's a key part of all of this. So here's exactly what I would do for this. Okay, so the number one thing I would think about is, what am I saving for? So if it's a house or anything where I might need the money in 5 to 7 years, well, that's a different story. You don't want to have money invested or anything like that. It's really just about putting money into a bank account and helping it build up. But I think for a lot of people, the main savings vehicle, the main savings journey that they're on, or they should be on when you start out early, is your retirement, because that's ultimately when you're able to get to that end point and have that freedom to do whatever it is you please. So that is a key priority for a lot of people. So what I would do in that case is think about a target age that I would like to retire. The general consensus tends to be 65 and it start moving up. Governments are increasing the age where you can draw down your kind of government pension, state pension, social security, and everything like that. But is that what you really want? If it's not and you'd like to finish up earlier, maybe you want to save $1 million by the time you're 60, for example. Well, then you need to get that figured out in terms of how you're going to get there. But set your goal, set the time frame, the amount of money you want to have, and then you can start working backwards from there and how to get there. Now, the way I like to do this is with an investment calculator. And again, it's surprising to me how few people actually go through this step and start working out the numbers so they can get a feel for what you need to hit your goals. So I like to use nerdwallet.com. They have a great investment calculator on there. So if you have a look at this on the screen now, you can see I'm on the page, and I'll put a link in the description for this as well. But all you need to do is punch in the numbers to get your total balance here of your goal. So for the initial investment, I'm just selecting $1, okay, as if I was just starting off with nothing. For the years of investment growth, I've selected 30 years. The estimated return of 10%, that's been the S&P 500, the kind of, the main benchmark stock market in the US has returned around 10% a year, and compounded annually with a monthly investment of $500. Now, don't get hung up on the numbers here. If it's $500, 500 pounds, 500 euros, whatever, it's all the same. Okay, if you put those numbers in, then you get a little over $1 million or £1 million if you're thinking in pounds, euros, whatever it is. So now you have your goal. 30 years, 10% return, $500 a month or pounds or whatever, and you'll get yourself $1 million. So by doing that, it's all very simple to see, and now you've got your roadmap. Now you just got to figure out how you're going to get there. All right, so the next thing I would do after I've worked out my goal is start thinking about the tax advantage accounts that are available to me that I can use. If you're in the UK, the most obvious one is the Stocks and Shares ISA, but you also have a self-invested personal pension. The US has got a 401k. In Canada, you've got things like RRSP or tax-free savings account. Which one of those am I going to use as my primary investment account to help me get to this goal that I've set up? I think for the most part, the one you're going to find the most useful and the quickest to hit your goal is going to be the retirement accounts. And the reason for that is because they're so tax efficient. Typically, you don't pay tax on the money that you put into it. And also, your company, a lot of companies are required to actually match you up to a certain amount. It could be 3, 4, 5%, in some cases even up to 10% of what you put in. So this could be a way to actually supercharge your goal, get there quicker, or in fact end up with even more at your chosen retirement age. Of course, it's very smart to do this in tax advantage account because it's going to save you money through the investment journey. And of course, it's going to help you as well when you go to withdraw the money to use it because you'll be paying less tax on it. So use a tax advantage account. Okay, so we have our goal. We now know what account we're going to use. Now we got to figure out what we're actually going to invest in. And the key here is not to make any dumb mistakes that are going to cost you a lot of money. A lot of people just want the shortcut. And like I said before, they just want a small cap stock or something that's going to bring them to their goal a whole lot quicker than a 20 or 30 year investment plan will do. Don't do it. Trust me, forget about that. Think about the long term and put the long term mindset in place. You'll be surprised at just how fast that time will actually go by. So what you really want to do here, in my opinion, is you want to look at things like index funds and exchange traded funds, particularly in the global market indices, mainly in the US, because the returns have been so good there over the last 20 or 30 years. I've done loads of videos on all of this. Again, I'll put a link to a few of them in the description, but I would have a look at those and look at an index fund or an exchange traded fund, probably in the S&P 500, the largest companies in the US stock exchange. Another thing I would do if I was starting all over now that I didn't do when I was starting is I would actually probably go to 100% in equities in one of these funds themselves. A lot of the books that you read say, no, go 80% in equities, 20% in bonds, or 70-30, whatever it may be. But if I could turn the clock back, when I was younger, I would definitely go into 100% in equities. I may adjust that in 10, 20, 30 years time when my risk appetite changes a bit, but in the early days, 100%, and I wouldn't worry about it at all. Okay, so now I've got my goal, I've got my tax advantage account, I know what ETFs or index funds I'm going to invest in. Now the final step in all of this is to get this on an automated plan and keep your consistency through your entire journey here. The best way to do that is with an automatic investment, so that every month the money comes out of your bank account into your brokerage account and automatically invests into the funds that you've chosen to invest in. Really don't make it any more complicated than this. And in all honesty, this is a very important step as well. Why? Because if you don't do it like that and you rely on yourself to maybe log in every month, move money from your bank account over and purchase it, guess what? You're going to stop doing it. It's just the way it works. You've got to get it on the automated investment, so you're actually paying yourself or saving first into this account, and then you're spending the money afterwards. That's the way to go here, not the other way around, where you're spending first, and depending on what you have left over, you'll invest it from there. That won't work. Trust me, it just won't. This is a form of dollar cost averaging as well, because every month you're going to be buying into the stock market. So there's good advantages here from a risk appetite perspective. You'll be buying a lot more when the market is down, and you'll be buying less when the market is really high. So it will all smooth its way out, and you'll be averaging in every month, which will make you feel more comfortable investing in the stock market. Because let's be honest, a lot of people, if they're not experienced, just view the stock market as some risky form of gambling, which a lot of people do treat it as such. But with the items I've discussed on this video, that is not the way it is. We're investing for the long term with a long-term mindset by averaging in every single month. And I guarantee you, you do that for 10, 20, 30 years, the results will be there. All right, so that's my video on what I would do if I could turn the clock back and start my investment journey today in 2025. Some of these steps are absolutely crucial. Take them on board, get started up, and mainly what you want to do is just start getting invested by using these tips that I've given you here. 100%, it's what I'd be doing if I was starting all over today. If you like the video, why not leave me a comment? Tell me what you think of it. Hit the like button, subscribe to my channel if you haven't done so already. I'd love for you to subscribe and help me produce more videos like this. If you want to see how to become an ISA millionaire, well, I did a video on this recently. It's a great follow-up to this video I've just just done here that you've watched. So I'll put a link to that right up there. How to be an ISA millionaire. There's some great details in there. So I'll see you over there. And as always, I wish you nothing but the best in your savings and investment journey.